I grew up in the 90s reading about investing on the masters like Warren Buffett and Benjamin Graham, who's considered to be the father of value investing. So in 2004, when I joined ICICI Prudential Asset Management Company and got a chance to be involved with ICICI Prudential Value Discovery Fund, which is involved in value investing style, it was an opportunity which I was looking for. What is value investing at its heart is buying cheap, waiting for returns to come and waiting for the value to come and selling those stocks and again looking for bargains, and that at the heart is value investing. So in this period from 2004 to 2022, when we have run ICICI Prudential Value Discovery, there have been very interesting periods. So if you look at a period like 2007, the fund did not do well because at that point of time, infrastructure stocks were very costly. And because the goal of value discovery was to buy stocks cheap, we avoided infrastructure and looked at other sectors and did badly in 2007. But over the period subsequent to 2007, we got the benefit of being focused on the value style. Similarly, in 2017, what happened was small and mid caps were doing extremely well. In line with the value investing philosophy, we had actually not focused on small and mid caps that year, which resulted in underperformance in that year. But in the longer run after that, it has actually helped us. Since the goal of investing is to deliver returns in the long run for all the investors, particularly the young investors, we have found that value investing as a framework works very well for the younger investors looking to invest for the long term, particularly for people who are looking to invest in systematic investment plans for multiple decades of time. It's a very, very interesting style because you're actually buying bargains, waiting for the bargains to deliver so that you can actually earn returns. And this is a style which has been popularized across the world for long-term investing. I was a fund manager of this scheme till 2011 when I became the chief investment officer, and later I got the opportunity last year to again become the fund manager of this scheme. And I really enjoy the value investing style because I found that style very good for long-term investing. So last year, we scanned opportunities and found that there were a lot of opportunities in telecom, given that telecom had underperformed across the world. And we found very, very interesting companies across the world which had underperformed for many years. So although most global funds and global stocks have fallen, telecom is one of the sectors which has actually done well because in line with the value investing principles, it was one of the sectors which had actually become pretty cheap over a period of time, and that kind of a framework is what works in value investing. So in our opinion, anyone considering value discovery should actually look at systematic investment plans. Anyone considering value discovery should actually be thinking long term, particularly if they are young investors. And people should be willing to look for bargains because that is the entire way in which we look at the fund for investment. Why I enjoy managing the fund is that when you're always looking for bargains, I've always found it very enjoyable because when you are part of the crowd and you're not part of the crowd which is looking for a bargain, it's not enjoyable. And looking for bargains has always been something which I have enjoyed in my life. That's why I like value discovery and I like value investing as a theme. Although there have been years, as I told you, like 2007 and 2017, where actually it did not work. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.